India is facing an important election year, and outside of recent tensions with Pakistan, the economy remains a key campaign issue. India's economy is the fastest growing large economy in the world. It's also a big country with a big population. The United Nations expects India's current population of 1.3 billion to keep growing and surpass China by 2024. But it's got some big problems. A few years ago, the country's current Prime Minister, Narendra Modi, promised to add 10 million jobs to help boost the economy. That hasn't really happened. The unemployment rate instead sits at a 45-year high. And GDP per capita, which is a measure of wealth across the country, lags behind rivals, like China, by a wide margin. Can India keep growing at such a fast pace? And if it does, at what cost? Here's how India became the fastest growing large economy in the world. The story of India, the modern-day economic powerhouse, starts right after the country's independence from Great Britain in 1947. Immediately afterward, India adopted a closed economy. It was essentially a socialist country. For years, India's economy remained stagnant due to a number of socialist policies it copied from the Soviet Union, like five-year plans. It also nationalized major industries like mining, insurance, telecommunications, and eventually, most of the banking sector. Poverty and corruption were big problems. Overzealous regulations stifled corruption. The country's socialist-style economy continued to sputter until 1991. That was the year everything changed. The Soviet Union, a major trading partner, had collapsed, and the First Gulf War disrupted the flow of cash coming from Indian workers in the Middle East.
So when you come to about 1990, India is still a very poor country. 1991 was a watershed year when economic reforms were launched. A substantial bit of liberalization began to happen.
That year, India's international credit rating was downgraded. To get a loan from the World Bank and IMF, the country implemented a plan of economic reform. India would open markets up to foreign competition, reduce the budget deficit, and eliminate restrictions on foreign investment, making it easier for entrepreneurs and Indian businesses to get funding.
And that process sort of continued till about 2004. All the command and control systems were dismantled. The foreign trade was opened up, and then Indian economy began to grow a bit faster. And particularly starting from about 2003, the economy really took off. So if you take about 15-year period from 2003 onwards, the economy grew almost 7.5%.
A big reason India's economy took off was because of the country's growing IT sector. Following the liberalized economy, Indian entrepreneurs quickly realized that the IT sector could become a lucrative business. Private engineering schools started popping up, creating large numbers of workers eager for jobs with lower salaries compared to U.S. IT workers. U.S. companies, Citibank and Texas Instruments, took notice and hired some of the talent, validating the country's new sector. By 2007, India's IT sector was posting revenues of $23.5 billion. By 2018, it was bringing in $167 billion. IT companies are now India's biggest private employers. Another big reason why India's economy kept growing at such a rapid pace lies in simple demographics. India is home to more than 1.3 billion people, and much of the population is relatively young and working. Experts call it the demographic dividend. Asia's elderly population is expected to blow up in the coming years. India, however, is bucking that trend. 65% of its population is below the age of 35. Deloitte, the global consulting firm, predicts India could supply more than half of Asia's workforce in the coming decade. India is now the sixth largest economy. The IMF predicts it could soon overtake the United Kingdom, its former colonizer, in total GDP output. But the country is facing a few hurdles. Job growth is a big one. India's current Prime Minister, Narendra Modi, faces criticism for not adding the 10 million jobs he promised in his 2014 campaign. In November 2016, he suddenly announced that 501,000 rupee notes would be taken out of circulation. The economy faced a severe cash shortage, and some economists argue the move cost the economy about 1.5 million jobs. Despite India's reputation as a tech and services hub, the country's workforce remains largely in the informal sector. About 81% of India's workers ply their trades in the informal economy. That means jobs like street vendors, auto rickshaw drivers, or household help paid in cash. Some economists say if India wants to progress to a developed economy, it needs the informal sector to become better integrated with the financial sector.
A lot of the economy is actually in the informal sector. Just to give you an example, in India, 95% of enterprises in India employ 5 or fewer people. So these are really mom and pop stores. That's about the informality at which it operates.
While India's economy is booming, its unemployment rate is at a 45-year high, a sign that jobs are not being created at the same pace. Economists call this jobless growth. It's when the economy grows but generates jobs at a rate below its potential. The agriculture industry is a massive employer in India, but it's not seeing the same kind of growth as other sectors. That could lead to putting millions of young workers out of work. Experts say the unresolved issue of jobless growth and failure to reskill workers could hurt the economy in the future.
Indian job problem has to do with the availability of good jobs. Jobs that pay reasonable wages. And this is particularly true for workers at the low end of the wage distribution, that when you look at unskilled or low-skilled workers, there are not enough well-paid jobs.
The World Economic Forum says India needs to work on infrastructure development and urbanizing regions of the country if it wants to stay on pace. Poverty also remains a big problem. 12.4% of the country lives at the international poverty level, surviving on less than $1.90 a day. However, the country has made progress. In between 2005 and 2016, 271 million people moved out of poverty, halving the poverty rate to 28%. India's rapidly changing demographics may help it become an economic superpower, but it's also creating big obstacles. India is a big, messy democracy, and if large swaths of the population feel left out of economic growth, it could lead to political unrest. All in all, though, India's economy is not showing any signs of slowing down just yet.